Get to Janet Moy, who is head of market analysis at RBC Brewin Dolphin. Janet, always lovely to speak to you. And on a day when Europe once again remains lackluster, downbeat, bit of a damp squib as well, I've got to ask you, when is the time for our viewers and your clients to take off their underweight in Europe and start bottom fishing?
Hi, good morning. Thanks for having me. I guess not for some time. We are underweight Euro ex-UK equities for the reason of the very different macro situation between the US and Europe. I'm not going to elaborate because everyone knows about US exceptionalism versus the poor economic situation in Europe. So I think if the valuation become more compelling, that could be a case or potential opportunity to add back in 2025. We don't know yet, but I think in the near term, at least, we still see ongoing weakness in European equities versus the US.
But I guess the bit that I don't understand, Janet, but there are many bits I don't understand. Yesterday, for instance, we had a company called ABB on, which we all know, a Swedish company as well, very successful company as well. And they've got massive facilities in the United States. US is a big market. Now, I'm just using it as an example. These companies in Europe that get to blue chip status, that get in the Euro stocks, that get in the FTSE, that get in the DAX or the CAC and what have you as well. These are stunningly international companies with stunning international base and split of revenues as well. Why are companies which are comparable to US companies trading at such an enormous historic discount, even when they have US footprints?
So I guess is the US relative to Europe story. I gotta say, in terms of the macro level, we are underweight European ex-UK equities. But as you say, there are great companies in Europe that has international revenue exposure. And some of that has done really well, actually. If you look at the German DAX index, or the tech companies, software companies done extremely well. So I guess there is actually a lot of selective opportunities in this environment when a lot of investors could be indiscriminately selling European equities at an index level or at a fund level. But it does open up attractive opportunities to buy at a discount. I believe there are some European names that would qualify for that. We're looking for secular growth companies, international exposure, potential for rebound, cheap valuation. So absolutely, there is opportunity amidst this weak macro environment.